to Balrampur Chini. Pramod Patwari, the Chief Financial Officer, joining with us. We're back to back on earnings today and corporate conversations. We get you the voice of all the management. Mr. Patwari, thank you so much for your time to us here at NDTV. Absolute pleasure to have you on. Let me take, get your take on the numbers first when we start off. And what really comes to mind is a healthy improvement in margins for this quarter. It's looking good. The net profit number, though, is down. But if you look at every other parameter, it's pretty decent. So how do you break up those numbers and what you're seeing on the PAT number as well?
Yeah. Good morning. On a standalone basis, the net profit numbers are better in comparison to last quarter.
Okay.
But on a consolidated basis, it is only down. So as far as the margins are concerned, this quarter, we got a power tariff revision, which accounted for almost 17.5 crores for the period beginning 1st of April 2024. So that we have accounted for in this quarter. That is also one of the reason. And sugar prices were in upwards of 40 rupees. That also helped.
Sir, I'm just looking forward, Mr. Patwari, and thinking about the second half, because I'm wondering what the implications for you specifically on the earnings side, on the financial side, will be of that center decision to allow 1.5 million tons of sugar export for the 25-26 sugar season that started from October. What is the implication on the price on the domestic side and on the international side, the rate that you're getting?
Yeah. So let me draw a sugar balance sheet for this matter. So we are beginning with a 5 million ton of sugar inventory at a country level. Expected production in our view will be 34.5 million ton at a gross level. We are expecting a diversion of around 3.5 million ton on account of ethanol on the basis of allocation which the sugar industry has got. This will result into 31 million ton of net sugar production and against a domestic demand of 28.5 million ton. So we would be adding 2.5 million ton to an opening inventory of 5 million ton. Against this, the government has allowed 1.5 million ton as an export. So the closing inventory expected by end of the silver season is around 6 million ton. Now, this is too much of inventory into the system. So when we move into the crushing season, peak of the crushing season, normally the sugar prices comes under pressure. The government has realized this, and on that basis, this year they came out with an export quota much earlier than the last year. Last year, government announced this quota in January. This year, they announced in November. Currently, the international prices are not that remunerative, but we have seen in the past also that after the closure of the Brazilian sugar season, we get an opportunity to export sugar in some form, maybe low quality white or at times refined sugar also. So we are hopeful that this decision will surely help in evacuation of the surplus inventory, which is currently lying into the system, which would in the result help in arresting the domestic prices as well.
Okay.
Otherwise, on the basis of the amount of inventory what we are having,
yes,
once we move into the sugar season, domestic prices can come under pressure.
Okay. So therefore, and thank you so much for that explanation. I think we got a sense for the rest of the sugar players as well. But for you, Mr. Patwari, you've seen an EBITDA improvement or margin improvement to the extent of 7.2%. I'm just wondering the dynamics that you've spoken about with regard to pricing and the fact that it could be under pressure in the domestic market in the second half, but there are benefits of starting sugar exports earlier. What is the implication for the margin in the second half?
So I would always request you to see the margin on a full year basis at a company level, not on a seasonal, not on a quarter to quarter basis, this being a seasonal industry. So if you see the Balrampur's performance in the last 5 years, on an average, we have delivered an EBITDA of around 680 odd crores. And during these 5 years, we have seen the ups and downs, both at the industry level as well as the company specific level, when we were badly hit by the red dot variety in 238. So that is my answer. I would not like to give any forward-looking statement as far as the margins are concerned, because we are awaiting certain policy announcements to happen. One is the ethanol price revision and some decision on the MSP.
What is the expectation from the ethanol price revision and MSP, Mr. Patwari? Can you give us both scenarios and how that works out for you?
See, in the last 3 years, including the current sugar season, we have seen an increase in the FRP to the extent of 16.5%, and against which we have not seen any revision in the ethanol prices. So I really don't know what number the government is considering, but we are hopeful that some revision will happen, and we expect the announcement on this front also. As far as the MSP is concerned, MSP was last revised in 2019. Currently, it is at 31 rupees. So we are selling sugar in UP at around 40 and a half rupees. Maharashtra is currently selling at around 37 and a half. So the best part of the MSP is if it gets revised, it raises the floor price. And during the peak of the crushing season, when the domestic prices comes under pressure, the ability of the sugar millers to borrow from the banks gets severely impaired. So if the MSP is set at a 30, if MSP is set at a higher price, we get bank finance at the higher level, which helps in clearing the cane dues to the farmers.
True. Mr. Patwari, Neeraj here, good morning. The newer investments that you made in allied spaces, right? How are they shaping up? When do we start seeing fruitful results from those?
So as we have said in the past also, the project is on the track and we are expecting the commercial production sometimes in the month of October 26. So a year from here on. Project is on stream. We are not expecting any cost escalation or the time run. So it is doing very well.
Well, I foresee some very different conversations with you come October or the October, November, December quarter 2026 as this thing shapes up. But Mr. Patwari, for today, we'll leave it at that. Thank you so much for taking the time out and being with us, and all the best for the quarters ahead.